welcome to ET Now, and this is IPO Central, and my company in focus is Midwest Limited. It's a company that explores mines and processes marbles and granite, and is based out of Andhra Pradesh. And joining me today is Mr. Ramachandra Kolareddy, who is the promoter and CEO, and Uma Kolareddy, who is the promoter and director of the company. Their IPO is opening on October 15th and closes on 17th. Price between 1014 to 1065. It's an OFS of 210 crores and fresh issue of 250 crores. Totally a 460 crore issue which is there. And joining me is Ram and Uma. Thank you very much for joining us on ET Now. To begin with, Ram, you're one of the few companies which is coming into the market from your sector. Take us through your sector first, and what is your business comprises of, because you are into mining of natural stones, but how big is this business and what kind of opportunity do you have here?
Sure. I'll just give a brief background for a few seconds. So Midwest was started 4 decades ago by my father, Mr. Raghav. We are in natural stone business, and for the last few years, we have pivoted towards more strategic resources, of quartz and heavy mineral sands. So in terms of business, you'll have to understand us in natural stone, quartz, and heavy mineral sands. So in terms of natural stone business, we are the largest black granite producers in India with a 15% market share, and export of black galaxy granite market share of 64%, by far the largest in that segment. The business segment, prima facie, black granite has been growing at a CAGR of 11 to 12% historically. We assume that the growth will be similar. The driving forces are building activity globally. The markets keep shifting from time to time, and having access to the resources that we are blessed in Southern Peninsula, the positioning differs. So the most high growth markets right now are Middle East, specifically Saudi and India, and we export to 17 countries as we speak.
And what is the total export as composition of your total revenue?
Our total export is close to 65%, and the out of a revenue of 626 crores, FY25.
Uma, come in here. I mean, I'm seeing your numbers of 626 crores for top line for FY25 and Q1 numbers of 142 crores. You have a margin of 27.4%. Is that the nominal margin in this business for you?
So it's been, we are having a 27% EBITDA margin this year, last year, very similar. And our PAT margins have a CAGR of 40% over the past 3 years. And, our EBITDA margins also have been on a growth CAGR of 38%.
Ram, if you can come in here and just take us through, because these are mining, you're in a mining business, and I'm sure there are tenders which come out. So what is the kind of tenure of the mines that you have? Because if I'm not wrong, you have 16 granite mines, 3 quartz and 1 marble mine, right? And what is the kind of mines which are there in the pipeline for you?
So granite is predominantly governed by minor mineral policy. Typically, the licenses are 20 years, renewable for 20 years, and another 10 years. So you should look at a period of 50 years. Quartz is similar, 50-year tenure. We always have a pipeline as a company. We have some licenses coming in to renewal next year, next 10 years. Then we have earliest licenses which we have got as early as this year, another 50-year runway to go. And at our scale, the pipeline, we always maintain a pipeline. So consolidation of the industry, of the business, it's a highly fragmented business. Consolidating the same and becoming a leader has been our core focus, a relentless focus, and we continue to do that.
If you can also take us through the process of, developing a mine. How much time does it take to develop a mine from the time of winning through a tender or a bid that you get?
So I would like to discuss more on all these 3 verticals, because all 3 cycles have different process. So in terms of the black granite, the most of the mines are developed. So it's more production and throughput and yield increase and cost efficiency that we build into the business for the next few years. In terms of quartz, we are a material company more than the mineral company. When I say that, you mine the quartz and we produce the powder and grit suitable for solar industry and engineered stone industry. So we don't sell ROM of the mine. We sell actual material that is that is meeting the supply chain requirement of these two industries as I spoke. In terms of heavy mineral sands, it's similar. So our plan is to extract the sand, process the sand, take out the titanium and rare earth material supply chain that is strategic for the country, and then be heavy on the material side, not on the mineral side.
And do you have a refinery to do that for heavy metal sand?
So heavy mineral sand prima facie has two parts. One is a concentration plant. Second is a separation plant. Yes. So we are building both of them in Sri Lanka.
In Sri Lanka?
Yes. So heavy mineral sands, to give you a perspective, is in India we are rich in resources, but it is only government companies can do this business. We acquired license in Sri Lanka where private enterprise is allowed about 18 months back, and as we speak, we are progressing and going to build a plant there. And the timing of it is there's a lot of tailwinds in the sector because everybody is after these strategic resources now. But we started this journey long back.
250 crores which you're raising, is that going to be used for that as well?
So it's going to be primarily used for phase 2 expansion of our Quartz processing facility. Now, the Quartz processing facility, like our CEO has mentioned, it is catering to both the engineered stone and the solar glass industries. Now, solar glass industry, of course, is growing at a CAGR of 30%, and the glass consumption is heavily imported from China as of now. More than 60% of the solar glass on the panel is imported from China. So the idea is to supply the quartz raw material, the grit and powder that is required for the industry, so that there is self-reliance in the solar supply chain.
So do you have a long-term agreement with many of the glass manufacturers in India for that?
Yeah, in southern India, yes, we have a tie-up with a couple of them.
And what is the kind of supply agreements that you get, or what is so the margin which you mentioned of 27% is a blended margin for across 3 verticals, and I think if I'm not wrong, correct me here, when your granite or natural stone business is already mature enough, you are in a developing stage for quartz business, and heavy metal is still in the initial stage of getting developed, right? So what is the kind of margins that each of this business will have once they have matured?
So the margin profile you mentioned, the 27% is the existing margin for our granite vertical, the granite natural stone business. And there we have a 64% export market share. And the quartz business, as we've just commenced the processing plant in the September quarter of this year. So if there are listed players like Sibelco, who's our competition, who's an MNC, who's listed, margin profiles look encouraging.